it's pretty clear that whoever is the next president is going to have to deal with some sort of U.S. government debt crisis. And I'm concerned about how that response is going to be, regardless of which candidate wins. So, for example, Trump, in his case, when there was a major economic crisis in the form of, what happened economically as a result of lockdown policy and because of COVID-19, the person that he and his administration reached out to was Larry Fink of BlackRock, who implemented something we can get into later that some researchers have called the going direct reset, which was basically a way to put money from QE directly in the hands of the private sector instead of public entities, sort of like it had been done before. And arguably that resulted in a massive wealth transfer, and BlackRock didn't really use that money to help Main Street at all. They used it to buy shares in their own ETFs, among other things.
Bitcoin Zella stands out with its simplicity and clarity. We've crafted an experience that anyone can dive into, whether you're a crypto expert or just a new to the crypto world. Now guess who keeps his eye on us? The author of best-selling book Rich Dad Poor Dad, Robert Kiyosaki. And we want to take this opportunity and thank all the people who trusted us, and we read every comment. And the best part, it's free. Subscribing now means you will get all new information for free. Don't just follow the trends, stay ahead of them. Subscribe to Bitcoin Zella today and enjoy the new edge. Whitney Webb dives deep into the undercurrents of power influencing our government and economic systems, with a critical look at entities like BlackRock and their profound influence over fiscal policies. She predicts future crises engineered by the elite or from challenging mainstream narratives, calling instead for greater individual and community resilience.
And then Kamala, in her case, her entire economic team is essentially led by former BlackRock executives. And that was also true for the Biden administration. So essentially BlackRock, which was also played a major role in sort of developing the bailouts in the 2008 economic crisis, which was under Obama, right, will likely be developing the response for whatever this, coming economic crisis is, regardless of who gets in office. If we look at, the policy actions of the people running who they turn to in a time of crisis or who is running their economic team, that seems increasingly likely. So that is why I'm very concerned, I guess I would say, about BlackRock in particular, because they seem to be the people that the government turns to regardless of whether a Democrat or Republican is in office. And, they have sort of a history of really affecting wealth transfers during these crises at a time when, they're supposedly developing or helping develop policy meant to bail out Main Street. They end up sort of affecting massive bailouts for Wall Streets and, of course, the people that BlackRock are trying to generate profits for ultimately. And the other thing that I'm really concerned about as it relates to, a coming economic crisis is that I think we're going to see a major effort to saddle American consumers with programmable, surveillable money and seizable money. And so, of course, a lot of people for years now have been very concerned about central bank digital currencies or CBDCs. But there are also things issued by the private sector, like stable coins, for example, that are just as programmable and surveillable and seizable as CBDCs are. So I think it's very likely in the event of a major debt crisis or some sort of crisis that damages significantly regular Americans' purchasing power, there will be an effort to onboard Americans onto one of those two versions of programmable, surveillable money. So it's possible, if Kamala wins, we could see a CBDC or something like that. But in the case of Trump, he's sort of come out in favor of stable coins. He did that recently at his speech at the Bitcoin conference earlier this year. And, stable coins are just as programmable and surveillable and seizable as CBDCs in theory are. And I think those, as people have rightly pointed out, are a threat to our financial privacy and ultimately our financial freedom. So I think people should be focusing not just on CBDCs, but also, these other, digital currencies that have the potential to offer those same, Orwellian functionalities to the people, issuing them and producing them. And some of those prominent stablecoins like Circle, for example, have major alliances with BlackRock, and BlackRock has a minority stake in them and have, said in their some of their SEC filings that, the stablecoins can be used to manipulate the price of Bitcoin, for example.
A long-awaited United States Federal Reserve interest rate cut could push Bitcoin down, the opposite direction of many market participants' expectations, and possibly cause its price to dive to levels not seen since February, analysts say. If we were to speculate, we would caution to expect a 15 to 20% decline when rates are cut this month, with a bottom of $40.50 for BTC, Bitfinex analysts wrote in a September 2 note. Bitfinex's analysts backed up their claims by reiterating that September has historically been a volatile month for Bitcoin, and the anticipated Fed rate cut only adds another layer of complexity, potentially exacerbating the market's volatility. This logic could be negated quite easily if macroeconomic conditions change. These are uncertain times for traders, the note added. The Fed interest rate decision is scheduled to take place on September 18, and the market sentiment is optimistic that it will lower rates after dovish comments from Fed Chair Jerome Powell in August saying that the time has come. Investors often view perceived riskier assets, like Bitcoin, as more attractive when interest rates are cut, as traditional assets like bonds and term deposits become less lucrative. A 20% drop from its current price will place it around $46,000, which it last traded at on February 8. It's also a level that Tench Research head of research Marcus Thielen said is the point Bitcoin needs to reach before a bull run begins. Thielen said in early August that to ideally time the next bull market entry, we aim for Bitcoin prices to fall into the low 40 zeros. The Bitcoin layer analyst Joe Consorti wrote in a September 3x post that $60,000 is no longer a blow-off top level dominated by speculators. It is a consolidation zone where long-term mature holders accumulate and HODL. Meanwhile, crypto trader Don Crypto Trades opined that Bitcoin is still fighting around its bull market support band. Doesn't seem to want to move away from it to either side at this point, they added.
Yeah, so I think there's things that we can look at as far as BlackRock is concerned that sort of give us clues as to what their agenda may be. And the most concerning thing to me about that, as it relates to people like Larry Fink, is that Larry Fink is on record saying things like markets don't really like democracies because they're messy. Markets like totalitarian governments. And Larry Fink is someone who's been very obsessed with risk management most of his career and sees essentially, free democracies and arguably also a free market in some senses as, generating more risk than perhaps he would like to handle. So when you're able to sort of control and centralize both markets and governments, you're able to control the amount of risk that's there. And so maybe that's good for asset managers like Larry Fink, who are obsessed with this kind of stuff. But for, regular people, ultimately it reduces the amount of freedom that we would have. So I sort of see Larry Fink as someone who's looking to centralize power and centralize wealth. And obviously that has major impacts on regular Americans and the people that aren't necessarily in the oligarch class or in the top 1% that would benefit from those types of policies.
Ethereum has been trending downward against Bitcoin in recent days, which has contributed to weakness across the cryptocurrency market. But relief could be on the horizon in the months ahead. The bad news is that Ethereum is currently facing the lowest point of its price against Bitcoin in the last 1,000 days. That's a massive blow to everyone invested in Ethereum, especially as multiple upgrades have taken place over the last several years. While Ethereum ETF have also launched, they have failed to provide strong momentum. On the bright side, all of the market weakness could be simply due to seasonality, a factor that will soon be working in favor of bulls. In past years, altcoin markets have surged and fallen depending on the season. A prime example is Chainlink, which generally surges against Bitcoin in the second half of the year, while losing value during the first half of the year. It lost more than 60% of its value during the first half of the year in 2022, 2023, and 2024, and surged more than 120% in the second half of the year in 2022 and 2023. Altcoins are currently showing a beautiful retest against old price levels and indicates that there is nothing wrong with the current thesis of the markets. It's still very comparable to any of these stages that the markets have witnessed in previous cycles. If the markets are brought back to the last stage of 2020, they will be in the same climate, where altcoins are heavily correcting downwards while Bitcoin holds itself steady or continues its momentum upwards. In that regard, the market capitalization of the altcoin market is still down 50% from its all-time high of 2021. There is still a lot of momentum ahead, and if you compare the action of the overall altcoin market against Bitcoin, you might argue that altcoins have a big breakout on the horizon. They're showing a massive bullish divergence and a strong higher timeframe support level on which their entire market capitalization rests. Let's face reality. Ultimately, people want to generate more Bitcoin through those altcoins, so it makes sense that they'd want to invest in them during this phase of the market. And do not forget to subscribe to Bitcoin Zella. The most important news will reach your inbox on a daily basis and for free. I do not know why you have not subscribed yet. If you like the video, give it a thumbs up and subscribe for more daily updates. Remember, knowledge is power, and we're here to empower you on your financial journey. Until next time, happy investing.